Did you guys get your free stocks from Moomoo yet? If not, use my link down below. Deposit at least $100 and you could get up to 5 stocks, each of which could be valued up to $3,500. It's free money, guys. Get your money. Again, link down below. And now let's break down the markets for this week, my game plan, and 10 stocks I'm looking at, all of which, except for one, are reporting earnings this week. So sit back, relax, take a sip of your coffee. You're probably going to need it for this video, guys, and let's get right into it. So last week, and quite honestly, the past couple of weeks, you guys should know this at this point, the markets have been downtrending. Volatility is insane. I mean, look at the VIX, guys. The VIX is still very elevated. VIX is over 30, and yes, it's not where it was about a week ago where it was almost 40, but still, I mean, above 30 points for the VIX and it going up 5% just on Friday alone. This is insane, guys. This is insane. And on top of this, we have gold up a lot, silver's up a lot. I mean, just last Friday, gold went up 2%, silver went up almost 3% on the day. And if you look at these charts, silver's been ripping. It's been uptrending the past 3 weeks. It's up about, let's see here, silver's up about 20% in just the past 3 weeks. Gold is probably up not nearly 20%, but still it's up about, let's see here, at least it's got to be at least 10%, right? Yeah, gold's up about 10% in the past couple of weeks. So that alone, gold, silver, and the VIX, all of them are trending up. That should tell you the markets are in shambles right now, right? And based on SPY, if we go back to this 20-day chart on SPY, you can see it's holding on 427 by a thread. 427 has been support the past couple of weeks, really almost about 2 weeks at this point. And if 427 breaks, hence why I have my alert at 427, if that point breaks, we're probably going to go down. And I'm not saying we're going to take the lows out from 410, the 410 lows from the end of February, but we're probably going to test them. And who knows if we take them out, maybe we double bottom and break out at 410. Nobody knows, but what I do know again is if 427 breaks, we're probably going to get some downside pressure. And when it comes to triple Q, let's pop this one up. Triple Q, like SPY's holding up, above 427 by a thread. Triple Q's holding above 335 by a thread. That's been support since the end of February. If that point breaks, if we see some selling pressure, let's say under 335, especially under 330, this is probably going to go back down to 317 to test that low from the end of February. And who knows? Do we take that low out? Do we double bottom at that point? Nobody knows yet. But again, as I told you with SPY, if we break 335, I know for sure we're going to get some downwards pressure. And of course, with everything going on right now, I think we have the CPI data coming out this week. We have Russia, Ukraine, the Fed in about 10 days from now with their meeting in terms of, what's going to happen with the interest rate, tapering, their thoughts on the economy. There's a lot going on in these markets right now. So I do believe there could be more downside pressure. I really do. And what could turn things around here is if maybe Russia and Ukraine, they come to some sort of an agreement. Maybe they cease fire, which I doubt is going to happen this week. It might happen in a couple weeks. I have no idea. And that's the point, right? Nobody has an idea of what's going on. That causes a lot of uncertainty. There is a lot of uncertainty. And what does the stock market hate? It hates uncertainty. So all we can do at this point is continuously dollar cost average in index funds, stocks that we like, ETFs, whatever we want to do. That's what we have to continue doing at these suppressed levels. And we really just have to focus on the longer term at this point. And of course, if you're a trader like myself, I trade and I'm a long-term investor. It's a little bit different, but from a long-term perspective, this shouldn't faze you. I mean, this should just be noise and a buying opportunity. That's the way I'm looking at it. And that's kind of what I've been doing, right? Dollar cost averaging, buying some stocks I like, adding more to stocks that I like. And I've been selling a bunch of covered calls. I'll tell you that for sure. If you're in my Patreon, which is linked down below if you guys want to join it, some of the moves I've been making. I've been selling a bunch of covered calls. So what do you think? Drop me a comment. Let me know your thoughts in the comments. Hit that like button and subscribe if you haven't done so already. And now let's talk about these 10 stocks, all of which are reporting earnings except for one in this upcoming week. So stock number one is Ulta, ticker symbol ULTA. Ulta went down 2% on Friday. It's now down about $20 from the recent 384 high. In other words, it is down about 5%. If I pull up this 4-hour chart, you guys can see 422 was the high from earlier this year. So we're actually down even more than just 5%. We're actually down about 15% from that 422 high from earlier in 2022. And we have earnings coming up here on the 10th, which is what? I believe that's probably a Wednesday or a Thursday, one of those 2 days. So we have Ulta later this week, and what I'm noticing based on this chart, guys, is number one, we pulled back. Obviously, we're down about 15%. We're in correction territory. Number two, we are under both moving averages now, both the 50 and the 180 SMAs on this 4-hour chart, and we see clear resistance at about 385. That's been the sticking point for about a month at this point. Actually, almost 2 months at this point. Since the middle of January, we've struggled at about 380, 385. So we got to get out of that point, and that's why I have my alert set at 390, which is even above 385, because I want to see a clear-cut break out of the moving averages, 385, and a break into 390 plus before I even consider taking this trade. And at that point in time, we can see, based on this 4-hour chart, we can see a clear channel. Every time in the past we've broken above 390, 400, it seems like, this has gone 415 to 420. That is the window that I'm looking to grab this at, between 385, 390, and ride it up to about 410, 420, that general range. That could give us anywhere from 5, 6, 7%, maybe even more upside. And with earnings coming up on the 10th, there could be some hype building up before the earnings report. So we're going to be watching Ulta. That's number one. We also have Dick's Sporting Goods, DKS. DKS is a stock that has been going down a lot recently. It's down about 25% in just the past couple of months, from roughly $145. Now it's sitting at about $110 a share, and you guys can see, like I said, it's down a bunch, and it's been downtrending the past couple of months, and we're trying to now break out of the moving averages, but we're not quite there yet. You guys can see we have this big resistance point at about 120, which is, the trend line here. So if we take out 115, 120 ahead of earnings, or heck, maybe even after earnings, with earnings coming up here on Tuesday, the 8th of March, if we start showing momentum out of 110, 115, there could be some upside. And we've seen Dick's Sporting Goods. We've seen the stock go crazy during earnings season. I mean, it's nothing new if you watch the stock. I mean, 2 reports ago, this thing went from $113 to $135, and then it went up to $147, all within a couple of days after the report. So in other words, this thing ran up 30, 35, almost 40% in a couple of days. And then in the previous earnings report, it collapsed that same amount, and probably not even more, but it went down about 25% in the days following the earnings report. So if we watch this, if we watch the downtrend and we see a technical breakout, maybe a good earnings report comes out, guidance is great, same store sales numbers, EPS, revenue, all that good stuff, we might get a breakout. So we have a clear resistance at about, like I said, 115, 120, not because of just this trend line that I've drawn, but we can see over the past couple of weeks, since the beginning of 22, this stock has not been above 115, 120. So I'm going to put my alert, let's say, at about $120. I'm going to give it some wiggle room there. We'll see what it can do above 120. If it breaks out, maybe 130, 135 could be next. So watch out for DKS. CrowdStrike's another one, CRWD. This one went down a whopping 6% on Friday, so big red day on Friday, but still, even though it had that red day, it is still above the moving averages. It closed above both of them. Actually, it looks like it barely closed under the 50 moving average, but it did close above the 180 here. So it's a little bit oversold here. We are again testing these moving averages, so maybe we get some buying pressure at about 175, 180. That's at least what I'm looking for this upcoming week ahead of earnings, which earnings are on the 9th, which should be on Tuesday, or rather Wednesday. is the 9th of March. So very simple, guys. CrowdStrike, it's been breaking out. It's been breaking out of this multi-month downtrend. It downtrended from 298 down to about 150. It lost about 50% of its value. And since literally last week, the past 8-10 days, it's been breaking out of the moving averages. We got some profit taking on Friday. And again, now I just want to see if buyers step in to maybe push this up for round 2. And by round 2, I mean round 2 of a breakout, because we got a really big move, in the past 10 days where this went from 153 to over 200. It ran up 35%. So it makes sense that we're pulling back a bit. Now, let's see again if we get round 2. So that's CrowdStrike, CRWD. We also have Oracle this week, which is a stock that, like the other ones we've mentioned, some more than others have fallen, a lot, right? Oracle's also fallen a lot. This one went down 2% on Friday, and over the past couple of months, it is down 30% from $106 down to about $76. And this one doesn't seem to be reversing quite yet, like CrowdStrike. CrowdStrike is reversing. This one, not quite yet. It's still under the main 180 moving average, which you guys can see has been resistance these past couple of months. So we have Oracle reporting earnings. Let's see here on the 10th, which is what? Thursday? Yeah, I think Thursday is the 10th. The 9th is Wednesday. Tuesday is the 8th. So if you guys are confused on what day is what next week, that's what the days are. So Oracle reports on Thursday, and I'm going to put my alert very simple. Whether we break out next week, a month from now, I don't know. Nobody knows what's going to happen. And if anybody tells you they know exactly what's going to happen, steer clear from them, right? But I'm going to put my alert at 81 a share for Oracle right now. Mark is at or above. And the reason why I'm doing that is because that is right by the 180 moving average. Very simple here on the 4-hour chart. And if we start taking that point out and we start breaking mid-80s, 85 plus, which would be a breakout of the resistance from earlier in early February of 22, that could be a reversal spot for Oracle, but we're not there yet. Like I said, we're still in a technical downtrend, so we got to be very patient with Oracle here. We also have CPB reporting this week, which is Campbell's Soup. This one looks pretty good, actually. The chart looks pretty decent. So we have a decent amount of things going on here. We have an uptrend. We're above the moving averages. We also have a golden cross, and on top of that, we have an ascending triangle. Like I said, we're uptrending. We're making higher lows, but we're struggling to break about 45, 46 bucks. That is the main resistance right now. So I want to see if we take 45, 46 out. That would be a technical breakout. The ascending triangle would play out at that point. And I'm also noticing some inverse head and shoulders action here, which if you guys take a look on maybe this 90-day, the 90-day probably shows it. If I zoom in, you guys can see it already played out. We have the left shoulder here, right? We got the head right here if it wants to work. There we go. And then we got the right shoulder right here. So you guys can see it already played out. It completed. We ran up to about 45, 46. That's where the right shoulder completed. Now we have to wait and see if the ascending triangle plays out, which again, if this thing breaks 46, 47, there could be a huge move up towards $50 plus for Campbell's Soup. And let me see, did I even tell you guys when they report earnings? Let me double check here. It's on the 9th, which is on Wednesday. So watch out for CPB. I'm going to put, actually, I almost forgot. I'm going to put my alert at 47 a share for this stock. And again, if it breaks that point, 50 plus could be right around the corner. The next one I'm looking at here, which doesn't report earnings this week, is JP Morgan, JPM. This went down 3% on Friday, and now we're heading into an inflation week. The CPI data, let me double check. Is that on Wednesday? Give me a second here, guys. So it says here March 10th. There we go. March 10th, 8:30 a.m. on the East Coast is when we get the CPI data for February. And typically around this time period, these time periods where we get the inflation numbers, banks are very volatile. And I believe JP Morgan is due for a snapback. I'll be honest. I think there's a relief rally coming. It's way too overbeaten down. It just hit a low of 132 a share, and it's straight up been downtrending for the past, let's see here, past month. JP Morgan is down about 15%. It's just way too oversold. And I'm not saying we're going to reverse completely and start breaking out after the CPI data or just next week in general. I'm not saying that, but I do think we'll get some sort of a snapback, whether that's from $132 a share where we are now to $140, whether it's from $135 to $150. I don't know, but I do know that it's oversold. Snapback could be coming, and I want to potentially play that. And on top of that, I'm noticing a bit of a bullish divergence. You guys can see RSI has been strengthening the past roughly month and a half, and the stock's been going down. So strength's building up, volume's kicking up. Now let's wait for that relief rally. That's again where we could profit. So JP Morgan, I'm watching it. It's very interesting in my opinion. Ahead of this inflation week we have. JD.com is another one. They report earnings, and mind you guys, this is it's a Chinese stock, so be careful with these. Be careful. I'm not saying not to touch Chinese stocks, but understand there is added risk with these stocks, right? So JD.com reports earnings on the 10th, which is on Thursday, same day as that CPI data. JD.com reports pre-market, and on Friday it went down over 6%, and overall it is down about $30 a share from the high point, which was hit in the end of November. So that's down about 32%. Pretty bad. But come to think about it, it's not as bad as Baba, which is down even more than 32%, 33, way more. It's down 60% on this 4-hour chart, and it's down even more if you look at the all-time high being 319. We just hit 99. Alibaba's down 70% from all-time highs. At this point, it's essentially being treated like a unprofitable garbage company, which we all know it's not. They make a lot of money, they're growing, but like I said with JD, Alibaba has a lot of risk due to the Chinese exposure, the CCP, the government over there, which we're not going to talk about in this video, but that is the main reason why these stocks are going down a lot. JD, Tencent, Alibaba, the list goes on. It's not because of the fundamentals of the business. We know that. It's because of the added risk from the CCP, which I believe long term, I'm willing to take that risk. I think this is a bit of an overreaction. I could be wrong, but long term, I'm willing to take that risk. Hence why I'm in Alibaba. Everybody in my Patreon knows that, and now you guys know that. I mean, I've said it before. And again, all my Patreon members get all my buy, sells, call outs, so they know in real time what I'm doing. That's linked down below if you guys want to join it. So yeah, watch out for JD. Watch out for JD this week, guys. It's a falling knife right now, and if we do break under, let's say $60 a share, which you guys can see based on the past couple of months of price action, we haven't broken under 60 a share. It's been support since July. We've tested it once, twice, three. Now it's the fourth time. So if we do get a little snapback rally here, maybe we go back to 70, 75 a share. But if we take out 60, there might be more selling pressure. In fact, there will be more selling pressure, probably to about 52 to about $55 a share. That's what I'm seeing here on this 3-year chart. So keep your eyes on JD.com. BLNK is another one, which I thought they were supposed to report earnings last week, BLNK. Maybe that was just my mistake, but it looks like they rescheduled it. Yeah, it looks like right here. It says 2/28 conference call, February 28th, but now it's saying March 10th is now their report. At least that's what it says here. So that is what? Thursday, we have Blink charging, and we saw last week ChargePoint reported, a big competitor to Blink Charging, and this stock shot up, I believe. Let me double check. Yeah, it shot up a little bit momentarily after it reported earnings. Now, if Blink does the same and maybe we start breaking out of this double top resistance, which you guys can see on the 4-hour here, if I show you, we got one. We got two, clear tops at about 25 to 25.50 a share. If they report good numbers, this starts breaking out of 25.50. There could be some upside for Blink Charging, guys. The next big gap to fill would be around 20, actually more than that, $31 a share. So I'm going to put my alert at about, let's see here, 26 a share. Create alert, mark is at or above 26 a share. We'll watch and see if it breaks out of there this upcoming week. And I don't know why that didn't register. Let me do that again. Mark is at or above 26 a share. There we go. I just got it to work. There we go, guys. So now it says I have 2 alerts at 25 or 26 a share. Either way, guys, 26 a share is where we're watching for Blink charging. We're also looking at DocuSign this week, DOCU, which has been a stock that's been just, obliterated. I don't know what else to say about it. It's been obliterated the past couple of months. It is down 70% from the $314 high, and that was back when? In August of 2021, and it's probably down even more. Actually, no, it's not. That was the all-time high. And if you guys take a look here on the 4-hour chart, if you remember the last earnings report they had, it was abysmal. The stock dropped 30% in a day, actually maybe even more than that. It dropped 50% in a day, 50% in a single day or 2 days, which is horrible. And it's just been continuously downtrending. And that goes to show if a stock is down a lot, they could report earnings, it could go down even more, and then it could continue going down, guys, until we get some sort of positive catalyst, which in this case, who knows? Do we get a positive catalyst on Thursday when they report earnings? Do we not? Do they drop the ball again and this stock goes sub 100? That's possible. In fact, I think that is likely to happen. I'm not trying to predict the future here. Don't trade based on what I'm saying. As always, I'm not a financial advisor, but if they drop the ball again on earnings, and DocuSign really was a company that did very well when everything was shut down, everybody was home, now everything's opened up, everyone's out and about, not using DocuSign as much, right? If they drop the ball, don't be surprised if this goes down another 10, 20%, and we'll come back. We'll come back to it in a couple of days and see what they reported, and we'll see what's going on, guys. We'll see what's going on with the stock. So the last one is First Majestic Silver, ticker symbol AG, which we talked about briefly last week. This is one of those mining plays. It's been doing very well recently as gold and silver. They have been crushing it. You guys saw the charts in the beginning of the video. Gold and silver are on fire. So First Majestic, they report earnings on, I think, Wednesday. Actually, no, on Thursday before the market, Central Standard Time. So we're going to be watching AG this week. We have an ascending triangle forming, clear uptrend over the past roughly month and a half, but we haven't broken out of 1250, which has been a clear resistance over the past same time period. So at this point, we got to break out of 1250. We're already noticing a golden cross. We're already above the moving averages. We just got to break 1250. And at that point, wide open gap, in my opinion. There's a wide open gap to 1375, 14 a share. And if 14 breaks, this could be off to the races, guys. We could see a huge breakout back to the high teens. We're talking 16, 17, but we're not there yet. Let's take it a step at a time. Let's see what they report in terms of these earnings, and we'll take it from there. So overall, that's it. Hope you all enjoyed the video. If you did, hit the like button, subscribe, drop me a comment. Make sure to join my Patreon if you guys want all my buys, sells, call outs, morning update videos. Everything I'm doing in real time is on Patreon, link down below. And don't forget to get your 5 stocks from Moomoo, guys. It's free money. Use my link down below, deposit at least $100, and you could get up to 5 stocks, each of which could be valued up to $3,500. It's free money, guys. Again, link down below. I'll catch you all in the next video. Peace out.